Nice. And we are live. Brilliant. Let's kick off. Welcome everyone to episode 2 of the Native Risk Collective live panel series, a new playbook for digital assets risk. We've got yet again another great lineup of panelists here, all experts in their own right around cybersecurity of varying flavors. We're going to be diving into a great theme today. It's called Standing on the Shoulders of Giants, learning from Web 2 cybersecurity and how to build a resilient Web 3 economy. Before we get into that, a short little spiel from me. My name's Alex Saleh. I'm head of partnerships at Native. A major part of my role here is in building and nurturing the Native Risk Collective. Now, everyone you see on screen here is part of the founding iteration of the Native Risk Collective. And what that is a risk management ecosystem that Native has pioneered alongside leading Lloyd's insurers, including Chaucer and Mosaic, alongside risk management partners like Hacken's Extractor, Station 70, Breachbits, and Hypernative and Circuit too. Now, the idea is very, very simple. We've collected some of the best risk mitigation tools in the space for blockchain and digital assets companies, and we paired them with tailored crime, cyber, and tech E&O insurance. This has been designed specifically for digital assets businesses. And the way that it works is by using the vendors that you see on screen and the other vendors in our ecosystem, you unlock discounts on this specific tailored insurance. That is the end of the sales pitch, but if you do want to learn any more about that, you can ask Native directly, or again, anyone on screen to learn a bit more about how insurance work together to provide risk mitigation value for our clients. So onwards to today's topics for the panel. As discussed, we're talking all about lessons learned from Web 2 cybersecurity, how they apply to the new Web 3 economy, and ultimately how a multi-layered, multi-perspective security and insurance approach might just be the best way to manage risk in this space. I'd like to begin by introducing our panelists. So Nate, I'm going to pick on you first. Please introduce yourself, tell us a little bit about your role, Station 70, and what you're currently working on.
Thank you, Alex. Thanks for having me. Very excited to be here with my fellow panelists. I'm Nathan Bekerman. I'm the head of product at Station 70. And for those of you who don't know about Station 70, we provide critical, essential infrastructure, business resiliency, and sometimes called disaster recovery software to crypto custodians, banks, hedge funds, asset managers, and really anyone who is trying to delve into the digital asset world and wants to have business continuity, business resiliency built into their operation. We help and provide software to make sure that that's there. And really excited to be part of the Native Risk Collective. I think it's very needed. Everyone talks about insurance, but no one really knows how to solve that. So we're happy to be here.
Yeah, brilliant. A real pleasure to have you on, Nate. Thanks for joining us. Foster, over to you. Could you tell us a little bit about yourself, your role? Tell us about how you founded Breachbits and what you guys do.
Thanks, Alex. My name is Foster Davis. I served in the U.S. Navy for over 15 years. I am Chief Operating Officer of Breachbits. Our founding team has led elite hackers in cyberspace, both on offense and defense. The founding idea behind Breachbits is to be the authority on the hacker's perspective of risk. So if you ever hear anything from us, it comes from what do hackers actually think? And some of the things that we're working on, number one is we are always keeping up with attackers. We are always evolving. When there are countermeasures to defenses, we are engineering those countermeasures to bring a more offensive look at it, and so keeping up with the trends in attackers. And the idea for us in the Native Risk Collective is about blending enterprise risk management, where you're looking at avoiding and mitigating risk, but also with insurance, where you're looking to transfer risk. And our belief in what we've seen and experienced is that when we're leading teams of attackers, the organizations that have a very robust enterprise risk mitigation and transfer actually do better than most in the ecosystem. And so we are the company that is trusted by the policyholder, but also by the insurance side as we look to quantify risk.
Brilliant. Thanks, Foster. Definitely be leaning on you for some of those lessons learned from Web2 cybersecurity, how we should be applying them to Web3 companies. So looking forward to getting into it. Dennis, over to you. Can you tell us a little bit about Hacken? Your role there, obviously, is very important, right at the heart of the company. And maybe also share a little bit more about Extractor specifically as well.
Hi, everyone. My name is Dennis. I work as head of product inside Hacken. We are more than 8 years on the market doing basically a variety of things in Web3 cybersecurity, starting from basic audits for smart contracts to layer ones. We have bug bounty platform called Hacken Proof, and Extractor as a product that basically analyze your infrastructure, analyze all types of risks that you have inside from on-chain, off-chain perspective related to your Web3 infrastructure and Web2. And we give you ability to understand the early signs of the attack. We give you ability to understand different financial compliance anomalies and build the workflow that allows you to minimize this risk. The platform is plug and play because it has more than 60 different monitors. So we are looking at each asset from different angles. And by providing you, empowering you with this knowledge, basically minimizing the consequences of any event.
Brilliant. Yeah, and I think one of the things that really impressed us when we were putting the Risk Collective together was the depth and the breadth of Hacken in general in terms of mitigating risk, but Extractor's power in being able to monitor so many different kinds of risks and then respond to them. So we'll definitely dive into how that works, Dennis, and I'm looking forward to doing that for our audience. And then Chris, last but absolutely not least, welcome to the panel. Please tell us a little bit about yourself, your role at Chaucer, and perhaps how you've been working in this space for a long time and the things you're going to bring to the panel today.
Thanks, Alex. Yeah, hi everyone. I'm Chris. I head up the Cyber Center of Excellence here at Chaucer as a key cyber analyst. Prior to Chaucer, I've been at Chaucer for about a year and 4 months now. I worked in cyber consultancy, starting off in incident response, case handling, then moving into proactive services and advisory work. And then similar to Foster, before consultancy, I was in the British military for 4.5, 5 years, working primarily within the Joint Forces intelligence space. So somewhat of a cyber and infosec nomad. I've been hopping around a few industry verticals now, but all that brings a point of view and a perspective I can then use at Chaucer. The Cyber Center of Excellence sits in a sort of hub and spoke model, providing technical insights and support to other lines of business, although primarily I work with our cyber underwriting team. I have a very close relationship with our innovation team as well, and they bring me all sorts of new interesting prospects and programs and get my insights on them. And that is essentially how we came to understand about the Risk Collective. And I'm happy to dive into this a little bit more, but it very closely mirrors, models a product and an approach that we're trying to spearhead with more traditional lines as well.
Brilliant. Chris, it's great to have you on the panel, your expertise, and yeah, definitely looking forward to hearing more about how you've taken a similar approach that obviously we've taken with the Risk Collective and applied it. And I'm sure there's no doubt lots to learn from that. I think just for everyone who's tuned in and watching, one of the things to break down and just explain and maybe demystify a little bit is this world of insurance, right? What you have here is a collection of vendors. They are pretty much, think of it as they're on the front line, right? Deploying solutions to actually prevent against risks of all different kinds. And then you have Chris, who's working at Chaucer, which is a large Lloyd's of London insurer. And they are the guys who take on the risks. So they're the risk takers. They build large insurance balance sheets. They are the ones who pay out claims. They are the ones who ultimately the customer has a contract with when they take out insurance. And the role Native has in this relationship is going between them and looking out for the best needs of the customer, finding the best insurance products, and through the Risk Collective, associating them with the very best vendors as well. So hopefully that explains a little bit around each of the different parties and what their roles are in the collective. Right, let's get into the meat of the panel now. So I think one of the things we wanted to talk about, and I guess what the focus of this panel about, is on learning from Web 2 cybersecurity practices, right? I've spoken to many kind of cybersecurity individuals who are saying none of this risk is new. The concepts are new, the technology is maybe a little bit new, but fundamentally, these are normal cybersecurity principles that can be applied to blockchain and digital assets companies. And it's interesting, right? If you read industry reports from Chainalysis, Hacken, some of these like really well-regarded reports that bring together a lot of statistics, somewhere between 50 and 80% of what the media calls hacks originate from Web 2 sources, which is really surprising, right? We had such a big focus on smart contract failures, on-chain exploits. In reality, the number one thing that appears to be going wrong is fundamental cybersecurity practices. Now, given that this is the case, do you guys, and this is a question for all of you, we'll kind of visit each one in turn, do you guys think digital assets firms are thinking comprehensively enough about the whole spectrum of risks that can lead to financial losses? I.e., what could go wrong, how can things go wrong, and how to defend against them? Dennis, I'm going to come to you first because you guys have a unique perspective as an on-chain risk monitoring agent and all of the various things you do. Are clients thinking comprehensively enough about all of the things that can go wrong, in your opinion?
Yeah, thanks, Alex. I would say that these days it becomes more and more relevant, and I believe this happened just as a natural evolution of the technology and maturity of the Web3 space overall. Because initially, then the technology was just developing, there was a lot of practices where specifically in smart contracts, there were a lot of vulnerabilities, holes, and so on. And they were the case of the attacks. What we see right now and how we see it right now, that you're completely right, more and more vectors of the attack are coming not from the smart contracts. And it's about the combination, about the Web 2 infrastructure, Web 3 infrastructure, and ability to get through the Web 2 to the Web 3 part and find the vulnerability and execute it and basically take everything that Web 3 company has. At the same time, I believe that Web3 risk is much bigger because basically all your TVL is at stake all the time. It's not that you are losing just some data, it's that you're losing everything. And we started Extractor specifically for this purpose. First of all, being able to analyze the state of the on-chain transactions, smart contracts, all the functions that are executed in real time, and to have ability to react to them. We started with just analyzing smart contract functions and understanding what exactly can be executed, what are the risks there. By understanding this, we saw that it's not enough and we need to go further. So we start editing much more Web 2 off-chain stuff with connections with the oracles, with the API, with wallets, with safe multisig. And now it's becoming more and more essential to see the holistic view on the company infrastructure. Because if previously the majority of the attacks were on the smart contracts and analyzing them was enough, right now, having ability to analyze the patterns and the connections between different pieces of the infrastructure is must-have. And we are doing a lot of like checklists of 10 must-have monitors for stablecoin, for RWA projects, and so on and so forth. Just you to be aware of how the proper security monitoring and incident response automation looks like. But having ability to analyze what is happening with your infrastructure is today becoming essential in Web3, and it was the basic need and the pattern in Web 2. So as the beginning of your words, we definitely need to have these best practices, and all the regulation are also taking the best practices from Web 2 and applying them to Web 3 with constant checking on the penetration testing, red teaming, monitoring, incident response, and so on. We definitely know that the top tier companies in the industry, top protocols, they are 100% using all possible solutions from the cybersecurity perspective that are on the market. They are building a lot of themselves. For the smaller companies, they need to have much easier solution, mostly plug and play. That's why we are helping with the complete setup. We're helping with the security assessment to understand what are the risks. And these things that we see are becoming as needed as a smart contracts audits themselves. And it would be great to hear other panelists what they're thinking.
Yeah, absolutely. I think, one of the things that comes to mind is because we are such a nascent industry and you've got people building so fast, they might have teams that lack a CISO or, a team of security specialists. And sometimes you have to be quite prescriptive in saying, well, these are the things you should be thinking about. And they don't come to you asking for those things, but they need to be guided in that way. Foster, when your clients are looking at Breachbits, do you find that it's a very consultative process, guiding them towards the types of risks they should be thinking about, i.e., by the way, it'd be great to understand a little bit around how Breachbits works, but are you guiding them towards thinking about things around how they're locking down their network security, avoiding phishing attempts or training for phishing attempts, making sure that they've got the right security in place so that you don't have people infiltrating their systems? Is it something they come to you knowing what they need, or do you kind of need to gently nudge them and take them on that journey of learning about where their risks are and how they're exposed?
Well, I think a lot of it has to do with the nature of Breachbits as the authority on the hacker's perspective. You come to Breachbits because you want to know what hackers are thinking, and so our role in any as a vendor, as a consultant, with our automation services, everything you get from us is about the hacker's perspective. And the reason that's important is because if you're going to have a mature, sustainable process, security is a process. It's not a destination. Security is a process. And so in that process, you have to always know, how am I doing now? Am I good enough today? Do I think I'll be good enough tomorrow? And that requires a team that is challenging you. And so our role as that hacker's perspective, we emulate the threat by doing the things that attackers can see, think, and do. We do the things that attackers did yesterday, the things attackers did 5 years ago, and the things that attackers will do tomorrow. And so in that process, Alex, just by the nature of us saying, here's what you look like now, here's where we were able to penetrate your defenses now. And the fact is that Web 2 based attack vectors, the pathways in which you get in, attackers are using those a lot. And there's a reason for that. It's because they work. I think of attackers in two types of attackers, especially for this audience. Think of attackers as two personas. One attacker, we could call them they're motivated by crime. They want money. And it's not necessarily an individual with a hoodie. Think of it like a team of people that's like a business. These people, they want to go in, they want to do their job for the day, and then they want to go home and they want to cook their dinner. They want to spend time with their kids. They don't want to work overtime. They're like you and me. And so they, in a way, they are productively lazy, meaning that they will do the thing that gets them the most for the least amount of work. Then there's a second type of attacker that's important here, especially in the digital asset space, and that is the dedicated attacker. Given enough time, any attacker with given enough time and the right tools, they will breach. They will get in. They just need enough time and the right tools. These attackers are dead set on hacking specific types of companies that they believe can give them a big payout. And they have a variety of motivations. But if your audience thinks about these two types of attackers, what would those types of attackers be trying to do to earn trust within your company, to exploit that trust, and ultimately to somehow make a gain for themselves? That's the type of thing that we're helping with those that we work with. We're helping them know that day in and day out.
Yeah, brilliant. Thanks, Foster. I think that really gets to the heart of this issue, right? There are so many ways to attack these companies. I do empathize with clients who must come to both of your organizations, Hacken and Breachbits, and say, well, how do I get a grip on this stuff? And obviously that's where you guys excel in delivering guidance, advice, and obviously technical solutions to help them navigate this. Nate, I want to come to you next. I think a lot of the media buzz, a lot of the focus, and just where clients' minds are because of what they consume, is on hacks and exploits. And oh my God, someone's going to come and steal my assets. But I previously worked in disaster recovery, as you know, and that is actually a more sort of insidious, under the surface, bubbling risk. Do you find that because it's a different kind of risk, it's not an exploit, it's not front of mind, it's not continuously coming at you, that clients tend to forget about it or they're not thinking about it enough? And what do you think are the potential consequences of that not being addressed?
Yeah, that's a great question. I was thinking about your earlier question also. I think one of the things that I talk about with clients a lot is that security and convenience are often at odds with each other, right? And that is a problem that we all grapple with, right? We do, our clients do, and it's hard because you have to find the middle ground that works for you and your company, right? And so if you look at the timeline of the ecosystem of digital assets and crypto, and like who were the players, right? And how that's changed, and what the personas and what the types of people worked at those companies. I've been in crypto since 2016, so I've seen different cycles. I've seen the different players in the space. And, in the beginning, let's say 2017 era, it was mostly early stage projects and early stage investors, right? Generally, I know I'm generalizing, but that's really what it looked like. And so you didn't have a ton of security professionals in the space yet. It was still early. There were some large exchanges that had some CISOs, but today there's CISOs in many or all of the major corporations. That didn't exist for a long time, right? And so unfortunately, the hacks and the loss of funds and all these things create the incentive for the good actors to be like, hey, I actually got to pay a lot more attention to this, because I can have the best product or the best business, but if I get hacked or if I lose my keys or if I lose my assets, it doesn't matter because everything's gone, right? And so that has created kind of the incentive. That's how things have changed over time. To the earlier question, I think, look, we're definitely at a crossroads today, where we sit today, where, I believe the baton is being passed from the young hoodie entrepreneur engineer that is building a project in crypto to the Web 2.5 TradFi that said, hey, I'm going all in on stable coins. We're building an on-chain business. That is happening today. And that is going to change the ecosystem for all of us, right? And I think that's very interesting. And we're very excited about that, frankly. And to the second point, the way we think about risk and the way our customers, today we work with roughly 20% of the digital asset custodians of the space, roughly. And I would say that when you think about backing up keys, right? And it's a very basic thing. Like, if you have an auditor or a regulator, or you have a board, and someone asks you, right, the most basic question, like, hey, what happens if this one vendor that you're using for key management or your MPC, what happens if this vendor has downtime? What happens if this vendor is not available? Or what happens if these key executives lose their phone or they're not available, right? And the most basic question, a lot of people used to freeze up and say, well, I don't know. We kind of we have a procedure and we got to go look at the procedure. And so this is one risk that actually, to your point, I think is new. It's not really a Web 2 risk. It's a Web 3 risk. In Web 2, for example, if you've lost all forms of identity and lost your computer and your phone, what do you do? What do you do to get back into your bank account, right? Like, you have to go in person, that doesn't exist in crypto. You can't go in person anywhere. So a lot of times the way I explain what Station 70 does is we are kind of the life vest on the boat, right? If you're going on the journey and you're sailing off into the ocean of crypto and digital assets, you need to make sure that you have a life vest, and it's very different. So a lot of times people in crypto understand the risk, and when they speak to us, and we can talk more about Station 70, which I'm sure we will throughout the panel, but it becomes very easy to understand, hey, I need a backup. I need to make sure that I always have redundancy, and those risks are being more and more perceived. Like I said, the people in the space are changing and maturing, for sure.
Yeah, absolutely. It's really funny. I hadn't actually considered that point, that backup and recovery, disaster recovery, operational resilience, it is uniquely different in the Web3 space. You can simply lose, one string of characters, which is your private key, and that's it. Not just your business, but the assets of all of your customers could be gone. We recently had a really high-profile cyber attack in the UK. Marks and Spencer's, massive retailer, right? It's where you go if you want to buy slightly fancier groceries. They got some good stuff. But it wasn't just one tiny line of code that got destroyed. It was, loads and loads of databases of data and their backup systems that all went offline, and they were offline for weeks and for months, and it had massive repercussions. But that was a huge attack. We're not talking about losing one tiny line of text, right? And so there is this, Web3 is in many ways, we can learn lessons from Web2, but there are many ways in which the risks for Web3 are more deadly, more instantaneous, and very small things going missing or being deleted can create massive repercussions. So I haven't come to you yet, but I do want to kind of come to you to get the insurance perspective on this specifically. I guess by the time clients get to Chaucer, an insurance broker has brought them to you guys are then looking at the risk and assessing it. You have a pretty good holistic view of what they've done ahead of time to try and mitigate some of these risks. Have they thought about, the transaction layer of protecting themselves when it comes to, sending and receiving crypto? Have they thought about whether they've got a key backup in place and whether it's the right kind of business continuity system for them? Have they thought about managing their networks and managing their devices and making sure they've got the right Web2 cybersecurity in place? Do you find that clients are often unprepared? Do you turn them away when they are, or do you find generally there seems to be quite a good grasp of what they need to be doing, and that makes it easier to underwrite them? What do you see kind of from the Chaucer perspective?
So when we look at risks at Chaucer, we have, I think, probably quite a differentiator in that we do a lot of peer review. We have a dedicated slot each week in which we come together as an underwriting team with input from exposure management and our pricing actuaries as well. And we bring risks much like that which native might bring us, where they are either in a new domain for the market, or it's a complex risk that requires everyone's input. And we sit down and we get comfortable with the risk. And if we can't get comfortable, well, ultimately we will turn it away. But this is where having an ecosystem that the Risk Collective brings to this as well is is so beneficial for us is because we know that it's additive to the traditional broker-insurer relationship. We have subject matter expertise from Hacken, from Breachbits, and from Station 70, which give us extra comfort that the risks that you are bringing to us have considered their Web 2 and Web 3 security, and that in some cases they've also been validated as well. Or if they haven't already been validated, that they are aware of tools and resources out there that can help them become validated. So it's not just a point in time of assessing the risk when it's brought to us, it's an acceptance that a risk can grow in its maturity. It can also backslide, but we'd always hope that they would engage, obviously, with the entire ecosystem to build a maturity through time. So the way that we look at risks is in that peer review process. And if I was going to sort of put a structure or a way of thinking around it, sort of our philosophy is 4 primary domains. Now, this is sort of principles-based underwriting and assessment. So it's obviously there are specifics within each domain or within each industry sector that require much more sort of technical insight. But we're looking at zero trust. We're looking at measures to prevent kill chain execution. We're looking at resilience, and we're looking at risk forecasting. And by looking at those 4 strategies, regardless of the domain or industry, and thinking about what I've tried to push to the underwriters as a sort of hopefully a catchy concept, which is 3C 2PT, which is look at coverage, configuration, and capability across people, processes, and technology. And if you can do that across those 4 domains, then you're off on the right foot, essentially. And the way that we approach Web3 risks, crypto risks, is no different. But we also have, Hacken that can give us insights into kill chain prevention. We've got Breachbits, great for risk forecasting and for zero trust testing. And then we've got Station 70 that can, provide that comfort that companies are doing the right thing in the resilient space as well. So that's in a nutshell how we pursue risks, assess risks generally, and then within the confines of Native's Risk Collective, how we approach Web3 and crypto as well.
Yeah, absolutely. I think the conclusion that we seem to be coming onto as we get more into this with all of our vendors and the clients who explore this as a complete solution is that, as we already know, a multi-layered approach is the best, right? I think you hit the nail on the head there by you can have a company that's got a great risk posture who's not using any of these tools, and they could come to you and they could get insurance and it'll be fine. It'd be a great client, but it's this idea of reducing the exposure to risk along as many vectors as possible, layering these tools, making sure that, there's this mantra that we hear all the time, the hacker only needs to get lucky once. And by layering all of these perspectives and these approaches, what we're doing is reducing that surface area for them to get lucky. So yeah, spot on. I think,
Alex,
Dennis, yes.
Yeah, can I add one thought here? Because for me, it was very, very different from the Web 2 part to the Web 3 part, because previously I was working with the B2C security on Web 2, on the endpoints. And what I see as a completely different perspective here is, like, then you are a startup, you need to move fast and break things. And as a startup, you don't care about security so much from the beginning because security is expensive and you need to put effort on this. But question, what is at stake? In Web 3, the TVL is all the time at stake. In Web 2, it's not the case. That's why, from our point of view, taking care of the security in Web 3, even from the beginning, you don't need to be the best at this, but you need to definitely put an effort much more than your Web 2 colleagues or anything. Otherwise, what is this at stake? The risk is that you're going to lose everything and you need just one breach. In Web 2, you can break things and no one is going to even see them because what is at stake much lower value. That's why your relation with the security, if you are building a Web3 startup, should be much closer. And you don't need to spend huge amount of money, but you need to take an effort to understand the risks. In a lot of cases, companies don't put enough time just to understand the risk in general, even not to cover them. And this is the issue from my perspective. Yeah, thanks.
No, I think you're spot on. I'd like to go into that in more detail, right? I think, when we were catching up before, one of the fundamental differences is the one single transaction and you've lost the entire TVL, or you've lost the entirety of all of your custody assets, right? And all it takes is that one transaction, that one piece of access to get some kind of signing privileges, and then it's all over. Pedro, I'm going to come back to you. I'd love to learn a little bit more about how customers can set up Extractor, right? What are they looking at? What are they monitoring on chain that allows them to see these risks as they're developing? And then how do they respond, right? How is it possible to be gathering the right information so that as soon as you spot something dangerous occurring, you can actually take action and prevent that risk from fully realizing?
Yeah, so inside Extractor, we gathered the all 8 years knowledge of our auditing team. So by doing hundreds and hundreds of audits, we understand what are the functions inside each smart contract and what are the possibilities of their execution. During last 2 years, we analyze each and every hack that is happening and divide it into actions. What exactly were the steps to lead to the hack? We provide all this knowledge to our attack detector to spot in the very early stage when the attack is going to happen, and immediately notify the team that something is going on, you need to take an actions. The more evidence we have, the higher severity is of our alerts, and the more we are insisting of the automated actions that are going to be set up inside the platform. But it's only one of the 60 different detectors, because there might be huge amount of different attack vectors, and not all of them are happening on chain. For example, with the multisig, the signatures, the approvals are happening off chain, and we can analyze it via API and also alert inside the system and make some actions on chain much faster. So basically, having this unique knowledge of what are the vectors, what are the risks, we have ability to analyze these different spots and provide alerts inside the system. Next step is that you are building the instant response according to these alerts. The higher the severity is, the more automated action you need to make and to build. And basically, you can do anything and you can program any actions, like pause the contract, filter the transaction, stop the transaction from the blacklist, change the ownership of the contract, and so on and so forth. There is not limited to anything. We have our own wallets that we are asking specifically for the permission for this exact action. We have even use cases of the asset managers. Then they asking us in the, for example, the higher risk inside some specific pool to take out their assets and transfer them to their other wallets. So it's also the use case that can be programmed. But basically, our unique skills is that we understand the risk of the specific project infrastructure better than many other people, let's say like that. And helping with the setup, helping with the underlying these risks is making the project much more secure than it was before, giving them ability to understand what's happening, empowering them with this information, increasing the level of the resilience on the number of access. If
makes
you
sense.
have something specific, I would love to comment on this as well.
No, it makes sense. I think, like, you know, what I'm hearing is from so much expertise and so many exploits that we've seen, kind of reverse engineering them to kind of pull out and distill the fundamental things and the fundamental things that can go wrong, and then monitoring for those scenarios in which they arise. Foster, I think, you know, Breachbits, as far as I understand it, in your tool, expertise lies at the heart of it. You guys take a slightly different approach with your machine learning, where you simulate an attacker constantly probing for weaknesses, and in the same way, building on that knowledge of what could potentially go wrong and then constantly monitoring for it. Have I got that right? It's almost as if a similar approach at both, at which there's a large database of knowledge of everything that could go wrong and everything that can be attacked. Is it a similar approach that you guys are taking?
Yes, I think what we're providing to the participants, to the clients in the Risk Collective, is your own automated, friendly hacker that will always tell you what they can see, what they can think, and what they can do. A quick story that I like to tell, which I think is related to a lot of the points that I agree with Dennis and Nate. And it's about awareness. And I think this was part of your second part of that question, Alex. It starts with awareness. We all have different companies at different stages with slightly different goals. Who's to say what's right to do for security? Well, there are some probably good ideas, but that is a very personalized and thing that should be tailored to the goals, missions of your company. And so what it starts with, what you have to start with, is awareness. And so the brief story I like to tell is, look, I have 4 children. I've got them ranging from going on 16 all the way down to 5. Well, in my house, I have this basement. And in the basement, it's actually very dark. There are no windows. And sometimes my children want to go down and find a ball or a toy in the basement. But when the lights are off, they have no idea even what to expect. And they actually are scared. They're confused about where to go. Should I go left? Should I go right? Am I going to bump into Dad's power saw along the way? We could say that there are lots of risks down there, but there's a lot of reward down there for them as well. And so I go through this exercise with them, and I just say, look, you can go down there blind if you want, and that might work. You might find your ball. But why not just turn on the lights? By turning on the lights, you instantly have awareness. Now you can plan the way that you will go find your way among risk in order to find your reward. And so what we're providing is, if you always want to know what the hacker thinks, if you always want to know what the hacker believes those risks to be, we will tell you what those are. We will tell you how to ruin the attacker's plan of attack. And then we want to enable businesses to make their decisions for what's right for their goals. And many of them are looking for what's the balance between mitigating and avoiding risk, and then where's that line of transferring the risk through insurance. The fact is, a dedicated attacker will get in if given the right tools. You cannot mitigate or avoid every risk. Risk transfer is an incredibly powerful and inexpensive way that should be a part of your integrated risk management. So look, I'd say turn on the light. Be aware of what the risks are for your circumstance, for your situation. And instead of worrying about what do I need to do today, if you have a constant process of just understanding those bad things that could happen and understanding how to get to those rewards, I think that will tend to guide your team, because I bet many of those looking and are interested in working with the Native Risk Collective are in varying stages. But if and you may have a small team, you may have a large team, but for both, what we've seen is if you go through that process, you're likely to have success.
Yeah, absolutely. Love the analogy. If you do ever invite me around for dinner, I think I'll avoid the basement. It sounds kind of scary down there. But
Well, we can go down and we can see the power saw that the kids don't want to play with. That's our toy, okay?
All right, cool. We'll have some fun with that. But I love this analogy of turning on the light. I think for all cybersecurity firms, that is basically what they do, right, Nate? When I was working in disaster recovery, you'll know this very well, because of the nature of a lot of the custody arrangements in the space, one of the first things you do once you choose a custody provider is discover this concept of backing up keys. Tell us a little bit around what you guys do to turn on the lights for something that is all of a sudden, I'm a CFO, cool, my company is pivoting into crypto, I need to learn this custody thing. Oh my God, now I need to learn about this backup thing. I know it can be very overwhelming. There's all this risk that's suddenly put onto your plate. What are you guys doing to turn on the lights for institutions who are finding themselves all of a sudden swamped with these security problems?
Yeah. So earlier I was mentioning the importance of having redundancy and resiliency in your operation. It's also important not to add risk surface area to what you're doing. And what I mean by that, in other words, is if you're going to protect yourself from one risk, don't add a larger risk by protecting that risk, right? So then you're playing whack-a-mole. And so, as wallets and key management solutions have evolved over the years, we've seen everything from hardware devices used by institutions like single key offline signing, right, into multi-sigs. And then, a few years ago, MPC became the most popular. Today, I would say it's the largest, most widely used solution for key management. Now, distributing keys, MPC, right? Basically, what doing is sharding keys and distributing them can be very valuable because you never have your entire key in a single place. So that's one thing that turns on the lights for customers. Like, hey, not all the keys in one place. But of course, naturally, you need most or all parts of those keys in order to operate your business, right? And so where do we help? We provide the same level of security that your leading MPC providers do for your backup keys. And so our view is that, and probably Foster would agree with this, is that the hackers will always go to the weakest link, right? Because as he said earlier, it's like wherever is the easiest place to get in, that's where there's the laziest way to get all the money, right? And so my analogy for that is, if you're using a fortified, brick wall as your front door, but your back door has one of those like flingy little locks that can just be sprung open, that's where the hackers are going to be going in. And so we treat your back door with the same level of seriousness that you treat your front door. And that's frankly why, clients come to us. We make it easy, right? This is, I forget who mentioned, like, easy is important, right? Even if you're a small team or a large team, easy is important because you're trying to not make security, the hardest thing to do, because at the end of the day, security is not the primary focus of that business, right? They're trying to do something else. They're trying to build a business, trying to generate profit themselves. And so, as security professionals, all of us here can agree that making it as easy as possible for our collective customers is very important. And so we take that very seriously. And so, we do key distribution. We're storing keys in distributed environments. We're using hardware secured, cryptographic enforced policies. And one of the things we're most excited about, not to get too ahead of the panel, but is building what the first ever in the industry that exists, what we call secure wallet transfers. We call it SWAT. I think Foster would appreciate the term. SWAT, which basically allows our customers to, in a moment of disaster, in a moment of duress, be able to take their keys from one wallet provider to another wallet provider. right? In a disaster scenario, your business cannot be shut down, right? If one of your vendors, even if it's a critical vendor, has some sort of downtime, your business cannot depend on that, right? And so that's what we mean by business resiliency and operational resiliency. If there's a downtime, one of those critical vendors, you have the ability to get back up and running, to maintain access to all your existing wallets without having downtime, without having, downtime of yourself.
Yeah. I mean, just brilliant. And Chris, I want to move the conversation on because we are very quickly running out of time. But just to touch on that, because I know you have an opinion on this, like really exciting, right? I think business continuity, a large part of cyber insurance policies is something called business interruption. And it does look different in crypto, right? Because you can have these large outages and all of a sudden you've got loads of companies offline. They can claim for loss of profits. They can claim for all kinds of costs that are incurred simply because they can't operate. And so something like that, I mean, sounds incredible. Chris, I know you're going to have loads to talk on about that. Maybe we can kind of pick up on it on another time, because before we jump off this call and kind of wrap things up, I do want to flip the focus into future-looking perspectives. I know this is something we spoke about. I would say as a group of cybersecurity and insurance professionals, we can be a little bit nerdy. I would say it's a little bit nerdy to get excited about things like regulation and rulemaking. But I think we do get excited about it, right? It shows that our industry is maturing. It does drive interest towards things like insurance and cybersecurity. Chris, working at Chaucer, obviously you guys keep a lens on the way that the market's moving and the trends that drive things and drive people who are building this space towards insurance. What are you excited about in the future, right? Looking ahead, what are the trends that you see that are going to be getting people to think more along the lines of securing their assets, more along the lines of growing up, being a more mature sector, and ultimately embracing things like cybersecurity, insurance, risk vendors, all of these great things?
Sure, it's quite a broad question. I think bringing it back to sort of those four things as I mentioned earlier. So that's where the risk forecasting comes in, right? It's like, how are you thinking about the future and how are you future-proofing yourself? And are you making the right spend in the right places to do that future-proofing? Ultimately, security, whether it's Web 2 or Web 3, it's a function of finance. You can't spend what you don't have, and you should spend what you have in the right places, right? So if we're talking about 100% total value, a potential loss, then you should spend your money for security in those places. Where it gets interesting is things like the convergence between, Web3 finance and sort of real world infrastructure. So I came across a concept the other day, which was an NFT sort of platform that was linking sort of a stop vaping service to basically gain tokens. So you stop vaping and you're awarded tokens in that field. So I thought, well, that's really interesting. So you're putting chips in hardware at that point, which is tracking people's behavior, and that's linking back to the chain. So that's a new space, I think. And another one is obviously with the convergence of TradFi and Web3 finance. So just last week, Andrew Bailey, chairman of the Bank of England, came out and said that it'd be wrong not to look at Web3 basically for a direction. This is specifically about stablecoin. So that's quite a significant admission or maybe a hint at direction of travel for the future from the most traditional of traditional TradFi sort of institutions there. So what's that going to look like? Had the Clarity Act, the Genius Act in the US. They're trying to get their hands around this space. They're trying to regulate it, which is, again, brings more risks and opportunities. But I see it as a convergence of sort of two traditionally maybe quite separate concepts and sets of institutions, right? One's innovative, one's more staid perhaps and a bit slower to move. But I think they are converging, and I think those risks are going to be really interesting to watch, where you've got, fiat currency being traded, in real time for, as it is now, but even more quickly for forms of cryptocurrency or tokens, and vice versa, and how really, like, if you're law enforcement or you're on the blue team, how you're going to track that interaction of those two risk spaces when they do converge. How are you going to develop new defenses and develop new ways of closing down risk where those risks open up? So chuck two things out there, and see what the rest of the guys think, but that's maybe, I think, where it's going.
Yeah, great questions. Dennis, I'd love for you to jump into that gap there. I see you guys as being right on the front lines, right, of monitoring and combating new on-chain risks. But I also know Hacken and Extractor, you guys have got great relationships with regulators across many jurisdictions around the world. So with those two things in mind, where do you see your areas of opportunity? Where do you see areas of change? How are you guys capitalizing on this momentum that's building around these two areas?
Yeah, you're right. We are working with different regulation, and we see very similar pattern that the regulation are coming, try to make the game really transparent. So the regulation are now looking at the risks as well, and making sure that their citizens in their countries are not going to be scammed by anyone. So the logic here, I see as with the regulation and with the regulation in different countries, institutions are going to enter the game much faster, and it's already happening. And like crypto, it's about the technology. And I believe that the next billion users are going to come with the regulation and with the enterprises, because they have the access to the end clients in tremendous scale. And understanding the risks and mitigating the risks here, it's the key to the successful onboarding. Otherwise, enterprises are not going to risk and not going to enter. And what also, as we are speaking about the future, we see that there is a heavy similarity with Web2 requirements, because regulation took the best practices of what they were developing for years, and saying that you need to understand your infrastructure, you need to see all the assets, you need to understand the risks, and you need to provide an instant response for each potential risk what is there. And we were talking about the downtime. Basically, it's the risk. In DORA, there is a specific mentioning if the service is downtime for the particular number of minutes with the particular amount or percentage of the customer is a critical risk, and you need to report it to the regulator with understanding how it happened, how you're going to minimize it in the future, and so on. So this is the similarity, and I believe that this is one more point why we need so many providers in the space and so high level of security in the space.
Yeah, brilliant. I mean, spot on, right? That goes to exactly what Nate was talking about in terms of providing that almost immediate resiliency in the case of mass outages, mass downtime. How do we build a resilient Web3 ecosystem? Nate, I mean, is that what you guys had in mind when you're thinking about regulations like DORA? Obviously, that's a massive, massive opportunity to then go and capitalize on, right?
Yeah, honestly, we didn't, we built Station 7 before DORA and MICA both were instituted and created. And so, the folks and the founding team behind Station 70 are all people who were previous custodians, right? And so we built this really out of need. We built this because, as I said, the folks who were in the industry evolved. They were more mature, more security focused, and we realized, hey, the Achilles heel of the entire operation is disaster recovery, and so we need a tool that is good enough for this. I know a question came through. I don't know if don't think I can see it.
So we've got a few. We are at time, so I am just going to connect up a few things. Renaud Hernandez has some very specific questions around backup storage requirements, how they're changing with Mika and Dora. Nate, can I task you? I mean, you are the best possible person to pick up that question. Renaud, if you're still watching, please pick up with Nate. He is your man. He knows all about that stuff, and they are top firm for sorting that out. We've got another question. I'm going to use this to round out, guys, because I don't want to keep you too long, and of course, you've all got work to get back to. Jaden Common, he's asking, quick question of the panel. Do you see a role for the Lloyd's market in shaping global standards for underwriting digital asset risks? Or is this better driven by crypto-native insurers who are closer to the technology? So I'm going to give a very brief answer, I think from Nate's perspective, is you can't stop this. You can't put this back in the box. When you look at the Lloyd's markets and how traditional they are and how they look at financial markets, an argument could be made that, change is happening very, very slowly, right? Like underwriting these risks, underwriting this technology, it remains massively underinsured. And that just won't do. Like the opportunities on the other side of this thing, adopting stable coins for payments, tokenizing a lot of the TradFi capital markets, those aren't going to wait for things like insurance to catch up to them, right? People are going to just take those risks, and we're going to see massive losses and possibly damage to the ecosystem as a result. So I think personally, it is down to Lloyd's to kind of drive innovation through the way that they look at these risks. Chris, I think you've got a very unique perspective on that. Whose job is it to better understand the stuff, and whose job is it to make sure that there's enough protections in place from an insurance perspective?
I mean, as carriers of the risk, I'd suggest that it's our responsibility to understand it and drive the standards in some respect. I say that from coming from a public service background where I've still got that that itch in me, right? To sort of bring the betterment of the entire industry, the entire industry of cybersecurity and infosec to whatever domain I'm working in. So I'm looking constantly for ways to work with partners, whether that be public service partners or whether that be private sector, financial service partners, to drive better understandings of risks across the board. And I this is my personal view now. I do think that the Lloyd's market could do more to drive these things. However, we are a market, and we are encumbered to the rules of markets, which adds other pressures onto decision making. So I'll leave it at that, Alex. But it's not a simple answer, unfortunately.
No, it's a very, very big topic. But thank you very much, Chris. I think it's time to round it up there. What I do want to say, thank you all panelists for your time. I think one of the things that's very is the level of expertise that surrounds the Native Risk Collective. And that's not down to us as the broker who sits in the middle. It's down to you guys and the efforts and the passion you have, not just for cybersecurity, not just for digital assets, but in general for kind of pushing this industry forward and keeping people safe. So thank you very, very much. I'm just going to finish up by saying, for anyone who is in London next week, there is a big blockchain conference in town called Digital Asset Summit. Native is hosting a little bit of a party on the Tuesday of the night, I think that's the 14th, to celebrate the launch of the Native Risk Collective. There'll be representatives from all of these brilliant companies there. Come by, reach out. We'd love to host you. And yeah, guys, thanks yet again for all of your brilliant insights and expertise. This is the second episode. I'm sure there'll be many, many more to come, and we'll be diving into these concepts in much more detail. So that's a wrap for today. Thanks again, and catch you next time. Cheers, guys. See you soon.